Hey traders, Ron here, Traders Academy. And as you know, it's our goal to coach and train traders of all levels. Typically we do that through our podcasts, our blogs, our meetups, and our webinars. But a few weeks ago we had the idea to put out through social media a question to all of you asking, what is your biggest challenge or obstacle that's preventing you from creating consistent trading results? And the response was overwhelming. So what we decided to do was take those responses and create a series of mini courses, each one answering a specific response. So we hope you enjoy these, hope you find them informative, and thanks for watching. Today's mini course is called Focus: The Effects of Media. And the question we received was, due to the overwhelm in the markets with tons of tickers moving at the same time, I find it hard to sift through the noise and focus on a very small segment of stocks to track and eventually trade. I guess it's the shiny object syndrome, especially with the advent of social media and everyone sharing stock tips and alerts. Well, don't feel bad about this. I can assure you you're not alone. This is a huge problem for the beginning trader as well as for more advanced traders. And as I've stated many times before, the media has become a giant retail machine, funded by and used by the brokerage industry to entice unknowing investors into the markets. And if you read my blogs, you should have seen the blog where I outline the 4 market cycles. And in that description, I point out how the retail investor always ends up getting into a trend too late and getting out too late and ending up buying high and selling low. And we all know this will not work for long. And this is a direct result of media input. So like with so many of the questions and problems sent to us, the easiest way to start working through this is to break it down into workable pieces. So let's do that. First thing you have to know and believe beyond anything else about the media is that no one, no software program, nothing out there knows where the price of any stock, currency, or futures contract will be at any point in the future. So when you hear any of these analysts come on and start talking about where the price of any stock is going to be in the future, you must realize that they always have some sort of agenda. It's their job to promote that stock. Also remember that the brokerage industry is one of the largest retail businesses in the world, and for them to continue to profit, they must advertise their products just like any other retail business. And one of their main products is, of course, the stocks and the instruments they sell and you buy. So the first step you need to take is to totally stop listening to any of the financial news stations. Now, I, of course, do listen to them, but I'm able to listen with a filter. So when I'm listening, I only look for specific information, such as binary events that could move the markets, news that can move a sector or the entire market, and I can totally filter out any of the noise that fills the other 90% of the daily chatter. But if you're not able to do that, then most are not, then I would still advise you to turn off all the media you possibly can. And this will be a powerful first step and will generally help clear a lot of the noise for you. Next on the list, it's really tied to the last point, and that's instead of media input, you might find yourself getting tips from other fellow traders. And I can personally state that of all the stock tips I've ever received from well-wishing friends, that 100% of the tips I acted on were losing trades. It's never worked out. So you must not allow yourself to take any trades based on someone else's recommendation. So by taking the second step, it should further decrease the amount of noise you're experiencing, thus clearing your vision, allowing you to make intelligent trading decisions instead of being herded like a Black Friday shopper. Now the next part of your question was where you were finding it hard to sift through the noise and focused on a very small segment of stocks to track and eventually trade. So first off, currently there are about 40,000 public companies traded in the US, and it would be impossible for anyone to sift through that many stock charts and pick out the best of the best. So don't even bother trying. Now, to make a really nice living trading, you only need a small handful of stocks. And so what I do for myself is I focus on companies that I can relate and understand what they do. For instance, I have an engineering background, so I've always focused on tech stocks. They have actually served me very well. But now for you, it could be something totally different. Whatever you have a strong background in or some level of extra knowledge, that might be a good place for you to focus. The whole point of this step is to massively decrease the amount of stocks you look at. For instance, of the 40,000 or so stocks out there, I tend to look at about 10. That's it, only about 10. Now, I'm sure there are thousands of other good stocks out there, but I don't need more than the ones I follow. So I put on blinders to all the rest. Now, if for some reason something happened that would cause the downfall of all the tech stocks, which I doubt will happen, but if it did, then I'd be forced to go out in search of another sector or group of stocks. But unless that happens, I'm just perfectly happy where I'm at. So that's the third step, to narrow your focus down to a much smaller area of companies that you feel comfortable with and just focus on them. Now, I know that people will tell you that you need to be diversified, and of course I can't argue with that, but at the same time there's a thing called sector rotation, and that's where you see mass market movement from one sector to another. And again, in my history, I've tried to diversify into other areas other than tech, and I've been disappointed every time, so I just end up keep coming back to what's always worked for me. And like I said, for you, it can be something totally different. Just find your comfort area and work there. Now, whatever group or sector you decide to work in, you'll always have the high flyers, the blue chip companies that tend to perform above the rest. So that's where you're going to want to start looking. Again, you want to keep narrowing your selection down to a small amount of stocks that you can monitor and not feel overwhelmed. Another good exercise to do once you get a workable group of stocks is to watch how they tend to perform during market declines. And you will want to identify the ones that perform better than the rest of the market and the rest of the sector. Another good exercise is to take this same list and look at each of their charts. Now, what you will be looking for here will be different based on the trading style you're using. For instance, if you're looking to make profits based on the stock moving up, or in other words, a directional trade, then you want to find stocks that show better than average strength. On the other hand, if you're looking to trade non-directionally, then you would be looking for charts that are trending sideways. Either way, regardless of what your trading style is, you'll want to use the charts in these exercises to further narrow down your list. Once you feel comfortable with your group or selection, another factor you need to address is money management or your risk management. And one of the biggest reasons you only need a handful of stocks is that in many cases the average trader has limited funds to trade, so they can't really support more than a few stocks. But too many traders try and push the limits on the positions they carry, and when the markets head south, then their level of fear increases and they start making decisions based on their fear, and we all know that only leads to more pain. So one good rule to always remember is not to be fully invested. Always keep a percentage of your total funds in cash. You'll be able to sleep better, and if the market hits a rough spot, your emotions will not react strongly. I like to keep that number for myself somewhere around 50%. Now, I think that if you follow these steps and systematically work your way through, you'll be more than able to decrease the noise to a very manageable level. Again, remember, you only have limited funds, and that amount can only support a specific number of trades. That number will also be affected by the prices of the stocks you're looking at. So if you're looking at more expensive stocks, then the number of different stocks will need to be smaller, or the quantity per shares per trade will need to be smaller. If, on the other hand, the per share price is lower, then you'll be able to trade either more different stocks or just more shares of whatever stocks you're looking at. Again, keep in mind good money management and good risk management. So to conclude this segment, I just want to again point out that when you look at our problems from a macro view, they always tend to look unsurmountable. But if we take these same problems, break them down into bite-sized workable pieces, and look at each of these from a micro level, then the task becomes enjoyable. So in your case, break everything down that you're seeing that currently causes you nothing but confusion, break those down into small pieces, and start working the process through. You will find it is far more rewarding and maybe even enjoyable. But in case all of this still seems too large a task for you to take on, I would like to suggest another option. Instead of taking all this on by yourself, you should maybe consider coaching. Coaching is something that is used by every successful professional, at the same time something that is almost never thought about for the average person. But think of this for a second. Pro golfers have coaches, pro boxers have coaches, sport teams have coaches, pro skiers have coaches, actors have coaches, even rock bands have coaches. And the list could go on, but I think you're getting the idea. And one thing you may not know is that traders have coaches too. In fact, I can promise you that all successful professional traders have coaches. All the large brokerage firms employ in-house coaches to support their in-house traders, and when I worked on Wall Street, I used our in-house traders quite a bit. So whatever path you decide to take, I just want to encourage you not to give up on your dream to become a trader. There is not another business in any field that has the potential to produce the kinds of gains possible as a trader. Remember, it's all about following the process, breaking it down into workable sections that you can tackle with ease. And remember, if you don't feel like going it alone, consider coaching. We want to thank you for watching. We hope you enjoyed it and hope that the information that you got can in some way help improve your trading. And if you'd like to watch the entire series for free, All you have to do is go to tradersacademy.org. That's tradersacademy.org. Fill out the form, give us your email address, and we'll send you a link to the entire series. Plus, we'll give you a free copy of our Reprogramming the Trader's Mindset book, and we'll give you access to a free 1/2 hour private coaching session. So if you'd like to take advantage of this offer, again, that's tradersacademy.org, tradersacademy.org, and thank you for watching.